It's great to have your company as always this Thursday, the 29th of January. My name is Jessica and I'm a market strategist here with Moomoo. What a great day it is for some, especially those that are invested. Markets are at brand new historical record highs. That's the case for the US stock market overnight, seeing it pierce to a historical record all-time high with the S&P 500 rallying on up. A few magnificent standouts, not in the Magnificent Seven, though. Get this, they're in the memory space. We spoke about some of these names last year. SanDisk up an eye-watering 122% just this year. Western Digital up 62. You've also got Seagate up 61. Micron up 52% so far year to date, and we're just 29 days into the new year. It's almost sickening. I guess it makes many of us wonder, like me, why aren't we invested into these memory storage chip companies? Anyway, let's move on to some other markets before we get to what you need to watch today. Hong Kong's market yesterday hit its highest level since 2021. Their market is now up, wait for it, lucky 88%. It's up 88% from its 2024 lows. While Japan's market is leading the Asian markets higher this year, Japan's market up 8.3%, but the Brazilian stock market, Arriba, that's up 21%. That's the best gain globally this year. And of course, you can invest in those markets via ETFs. It makes it nice and easy, doesn't it? As for news that you need to know about what is happening with central banks, well, in case you didn't catch the news this morning, the US central bank left rates on hold. That was expected. But they basically left rates on hold because the last US inflation print was in line with the Fed's target. And of course, the Fed loves that. But we did have two FOMC members basically being in favor of a cut. Something that was really interesting, though, is Jerome Powell actually signaled productivity is rising thanks to AI. So if you're not using AI, what are you doing? In other central bank news, you probably might be seeing the RBA next week hike interest rates. That's right, ladies and gentlemen, I said hike. Now get this, coming into the desk this morning, I had a look at the expectations. The expectation is a 75% chance the Reserve Bank of Australia will rise interest rates next week by 0.25%. And that's because yesterday's data basically validated that Aussie inflation is rising far above the RBA's expectations. Remember, the RBA looks at what's called trimmed mean CPI. The Fed looks at core PCE. So again, the focus down under is on the RBA's target trim mean CPI. Now that's rising more than expected. It's rising at 3.3% again. Why is that a concern? Well, the RBA wants prices not to be rising that much. They want prices to kind of be in the midpoint, only rising between 2 and 3% this year. Wouldn't that be nice? And US earnings season roars on. We just heard from Microsoft, Meta, and Tesla with their results beating headline earnings expectations. We'll cover what you need to know about these three tech titans later on in our update this morning. But today's focus right now are the four things you need to know about energy and what the market is telling you about uranium and why you should consider it. So the first consideration is big tech companies just reiterated AI spending is continuing to surge. Microsoft, Meta, Tesla, they reported results showing they're heavily investing in AI infrastructure and data centers. Sure, we are yet to hear from Google and Amazon. Their results are later out this earnings season, but the market is expecting the same messages. They're going to be investing records into AI infrastructure, and this is being treated as a long-term core investment. And this basically means these companies need to be thinking about how they're going to keep the lights on 24/7. So keep that front of mind right now. The second thing that you need to consider is Jerome Powell, the Federal Reserve Chair, just signaled that this is a serious economic investment. Jerome Powell basically put a rubber stamp on AI, framing it not as hype, as a structured trend that you should consider. He said exactly this: growth is coming from the investment that they're getting in equipment, and those things that go into creating data centers and are feeding the AI. Basically, all he's saying is the AI build out is a huge focus in the US. Point three is obviously this means we need to keep the lights on 24/7. And that means that nuclear power is front and center. We know um, the, I guess, the US, Canada, and Japan are kind of leading the pivot towards getting their grids powered by uranium. This is not going to be an option. It's not intermittent, but it's going to be the future. And we know many companies have actually said that they're driving this further. So nuclear, we know it's one of the very few scalable energy sources that can actually deliver scale while also meeting emissions targets. And it's exactly why AI infrastructure is continuing to expand, and hyperscalers are increasingly focused on actually getting long-term supply contracts directly from companies like Constellation Energy so that they can get power straight from the source and, I guess, bypass the need to use a grid. Because we all know what happened a couple of days ago when the US grid in some parts of America went down, homes without power. Well, data centers cannot afford that to happen. That's why they're going straight to companies like Constellation Energy. Now, the fourth consideration as to why you should consider uranium is the uranium market is screaming at you right now to consider investing in it. So, uranium markets are moving ahead. They're anticipating greater demand while supply is finite, right? So, uranium prices, in case you've not been keeping pace, we've been tracking those. Overnight, they just hit 98 dollars per pound. That's the highest level since 2024. Again, the narrative is demand is far exceeding supply, and this is expected to continue. So, how do you track uranium in case you haven't been keeping track of what we've been bringing your awareness to? Well, the world's biggest uranium investment, obviously the Global X Uranium ETF, URA, and overnight in the US, that hit a brand new historical record all-time high. Yesterday on the ASX, the Aussie equivalent, URNM, that also hit a record all-time high. So you probably, I guess, so everyone here has got an IQ above 2, but anyone with an IQ above 2 will work out that uranium prices, given that they're up 40% from 2025, uranium companies' earnings, cash flows, and the outlooks, they're probably going to be as spicy as the hottest chili sauce you could ever taste on the planet. That's why I'm telling you to please watch uranium ETFs and watch the companies that make up the uranium ETFs that we've just mentioned. But if you don't want to take my word for it, just have a think or type into Google or your AI search engine. Have a look at what the most recent earnings showed from some of the companies like Constellation Energy, and they'll tell you recent earnings from uranium linked companies, they're already showing drastic jumps in cash flows. They're disciplined and they've got long term demand visibility, and they're all upgrading their outlooks. Again, it's backed up by the AI infrastructure spend out. That, of course, is backed up by the world's biggest companies, the hyperscalers that are injecting billions into this space. The takeaway here, a simple one, before we move on to the tech companies that have reported results. The takeaway here for uranium, consider a couple things. First of all, URA, that's the world's biggest uranium ETF. Number two, we mentioned URNM, that's the Aussie equivalent of URA. And of course, just as a reminder, please do look at the companies that make up those ETFs. Let's move to investments to watch now. Microsoft, their quarterly results showed record numbers, but their shares are down about 5% post-market. So what do you need to know? Well, first of all, it was good to see that their profit jumped to a record revenue, hitting $81 billion. That takes yearly revenue to $305 billion. What was impressive was cloud business sales surging 26%. Again, driving home the narrative about data centers. They're spending records on data centers. In fact, they say that they spent 37.5 billion in the quarter on building out data centers. That's a massive 65% jump from Q2 in 2025. But the market really isn't sure that Microsoft is really getting good enough returns from its AI spend out just yet. But yes, if you do have a look at the average analyst, what they're saying, they are saying this company is a strong buy. Well, that's according to Moomoo's ratings that amalgamate what the average analyst is thinking. And speaking about what the average analyst is thinking, price targets range from 520 to $678. That's well above the close of last night in normal trade. But some analysts do note that they have been trimming their price targets ahead of their earnings result. Meta shares going the other way in after hours trade. Their shares were up about 8.5% at one point. That's obviously signaling their results beat expectations, and the market really liked what their results showed. Let's just go through the numbers now, what you need to know. So revenue climbed 24% to $60 billion in the quarter. If you annualize that, that's $200.97 billion. So $200.97 billion full year. The results, all in all, they beat expectations in terms of profit and revenue. But they also announced that they are going to spend big on AI. Surprise, surprise. They are also going to build out their own personalized AI offering. They're calling this super intelligence, and they're going to roll that out across all their social media users. This is not really coming as a surprise, really. But they also flagged that they are going to spend $135 billion this year, mostly on AI infrastructure. So the market likes hearing that they're bunkering down in that space as well. If you have a look at Moomoo's platform, it's been dubbed a strong buy among average analysts. Price targets, they range from, get this, from $710 to $1,117. And overnight normal trade, they close at $669. Obviously, if Meta does get to close to 1,200, you might be expecting maybe a stock split, maybe in a year or so. Let's see. Last but definitely not least, Tesla. Tesla is one of the most traded stocks at Moomoo, and I guess it's going to be hotly traded over the next couple of sessions. So Tesla's results beat earnings expectations. Their margins are improving, and their revenue is almost back to record. So shareholders like that, and that's exactly why Tesla shares are moving on up in aftermarket trade. Tesla reported actually revenue hit 24.9 billion. Annualized, taking a look at the last 12 months, that takes yearly revenue to 94.8 billion. So getting closer to their record numbers that we saw some years ago. But I do have to say that result was actually weaker than expected in terms of revenue, but investors are looking past that. What are they excited about that really is pushing their shares up in after hours trade? Well, it's all about profits. Operating profits actually rose more than expected. So operating profit hit 1.4 billion. That was on sales of 24.9 billion. Something that also, I guess, excited some shareholders, Tesla took a $2 billion stake in XAI. That basically draws a really strong link between Elon Musk's companies and really takes Tesla a step forward in becoming a physical AI company. I guess that's the thinking. If you have a look at Moomoo's platform, it's got a buy rating among the average analysts who cover Tesla. Morgan Stanley, though, has got it as a hold. I guess they want to see how this translates into Tesla becoming an AI company of the future. If you do have a look at the price targets, though, a very stark difference to what we are seeing with Microsoft and Tesla. Tesla's, rather, with Microsoft and Meta, Tesla's price targets are very, very varied. They're getting as low as 130 and as high as $800. And of course, Kathy Wood still has a $1,000 price target for Tesla. Tesla closed in normal trade at $431.